In the world of insurance, we use a lot of terms, abbreviations, and acronyms to describe coverages and policies, and one of those terms we frequently use is non-admitted without explaining what it is or what it means. In this video, I'll describe what a non-admitted insurance company is, what it does, and why it exists, coming right up. Hi, I'm Gordon Coyle. Welcome to my channel where we talk about the risk and insurance issues on the minds of business owners. As an expert business insurance broker, these videos are intended to help guide and educate decision makers like you to help make you a more informed insurance buyer. If I don't answer the question that's on your mind that brought you to this video, reach out and let's connect. I'd love to hear from you. So what is non-admitted insurance, or what is a non-admitted insurer? An insurer is non-admitted when they are not licensed by your state's insurance department or other governmental body that regulates insurance. In New York, that's the Department of Financial Services. Now, there are several differentiators between admitted insurers and non-admitted insurers. And I think that the biggest one is that non-admitted insurers do not come under the guarantee funds that many states maintain for the protection of the insureds like you if their insurance company becomes insolvent and is unable to pay claims. Now you may be thinking, whoa, I don't want to be insured with a non-admitted insurance company because if they go belly up, I'm not protected. I get that, but let me explain a few other points. The first point is that if you need to work with a non-admitted insurer, you want to make sure that they are well rated from a rating agency like AM Best, and they are A- or better and have a size category of 12 or better. In my opinion, having the assurance of an outside rating agency that can testify to the insurer's stability and strength is pretty important. Next, non-admitted insurers aren't necessarily bad or substandard. Some may be, but many very well-rated insurance companies exist in the non-admitted marketplace for the reason that it gives them the freedom of what we call rate and rule. Because these insurers are not licensed by the state regulatory body, they have less to say about the policy forms these companies sell and the premiums they can charge. The freedom of rate and rule creates a marketplace that offers more creativity in designing a policy and what they can charge for that policy. The good news is that this customization can be very beneficial, especially in areas of management and professional liability, which includes D&O, E&O, employment practice liability, cyber, and other policy forms like that. In this market, policy forms can be enhanced and broadened. The bad news is that for general package policies, meaning property and liability policies, there's a tendency for those policies to be stripped down from what we see in the admitted marketplace. So, why would somebody buy a policy in the non-admitted market that's not as good as the admitted market? It's a good question, and the answer is that the coverage or policy may not be available in the admitted market. A common example may be a general contractor or subcontractor like a roofer in the state of New York. Contractors in New York have a very difficult time getting insurance due to an antiquated labor law that makes most admitted insurers shy away from them. So most general liability coverage for New York contractors ends up in the non-admitted marketplace. Now, something specific to this point is that some of the non-admitted insurers writing contractors in New York will offer coverage excluding labor law type claims. The good news is that it makes insurance affordable, but the really bad news is that it exposes the contractors and their customers and their counterparties exposed to dangerously expensive uncovered claims. The big point here is that whether you're in New York or out of New York, a contractor or not a contractor, is that due to the flexibility that non-admitted insurers have, it's critically important to read and understand what your policies include and don't include. What you thought may be standard in the admitted market doesn't necessarily exist in the non-admitted market. The other big point here is that you should be working with a skilled broker who can help you understand what's in a non-admitted policy. This will be true of any policy written in the non-admitted marketplace. And with the commercial insurance marketplace getting harder and harder, we're seeing more and more accounts going into the non-admitted market, which heightens the need to work with a broker who has broad market access and good negotiating skills to be certain that you're getting the best deal that's out there. Have other questions or issues that I didn't address here? Reach out and connect. My contact info is in the description box below, and I'd love to hear from you. Thanks for watching, and if you like this video, do me a favor and give it a thumbs up. Thanks.